Welcome to today's webinar hosted by Rockall Technologies, How to Improve Operational Efficiencies with Collateral Tracking. We will be recording the webinar and all attendees will be sent a link to the recording. At the end of the webinar, there will be a question and answer session. You can send questions to our speakers by using the questions box in the GoToWebinar panel. Our first speaker today is Mark Simons. Mr. Simons is the Director of Sales at Rockall Technologies. Following Mr. Simons will be Luke Nestor. Mr. Nestor is the CEO at Rockall Technologies. I'm now going to hand things over to Mr. Simons.
Thank you, Mike. Good morning, everybody. Thank you for joining our call. I just briefly want to introduce this morning's agenda. So basically, we're going to talk today about how to improve operational efficiencies with collateral tracking. And this is the first of what we hope to be a series of webinars which we'll host over the coming months. And I just wanted to be clear to the audience what the specific topic is today is around commercial lending and collateral as it relates to commercial lending. So in our world, commercial lending means specifically loans that are typically to commercial entities in support of their commercial operations. So in that case, the collateral typically that we'd see would be stuff like real estate, plant and machinery, equipment, potentially deposit accounts as well, securities, guarantees. But we want to make the distinction between that and other business areas that we're involved in, such as wealth management and what we term corporate lending or facility management. So today's topic is specifically around commercial lending for the avoidance of doubt. So the agenda that we're going to follow today is basically initially to look at, from our experience of the market, the kind of challenges that we see people facing out in the banking world in relation to how they manage their collateral, how they manage their collateral and the collateral operations. What we're proposing and the idea that we have to solve those challenges, to address them, is to take what we call a holistic approach to collateral, where basically we take a view that collateral is essentially a first-class citizen of the enterprise. And we're going to look at what that means in terms of how a bank organizes itself and in terms of the impact on IT from a systems perspective, and how the operations, the people, the resource management is impacted by that. And so we'll dig into some of the details around the specific tasks involved in collateral management, how they can be best organized, and then we'll kind of take a look at how that helps to improve operational efficiencies or the impact that can have on operations that we've seen from our user base. Then we'll talk briefly to a kind of essentially a typical type of use case or a hypothetical case study where we'll talk about the challenges that we've seen a particular customer face and how they've been addressed, and hopefully they will resonate with some of the folks on the call. During the call, you all will have an opportunity to send us some questions, and we encourage you to do so. The questions are entered through it. There should be some kind of control screen that you see on the right-hand side, and you can type in your questions, and at the end of the meeting, we'll look at those questions. So we reckon we've allocated an hour, but we'll probably be able to get through the agenda in 30-40 minutes. So I'd like to, while I have people on the call, just to give people a brief introduction for those of you who don't already know us, on who Rockall Technologies is. So we're an Irish company, as you can probably tell by some of the accents you'll hear today. We're headquartered in Dublin, Ireland. The company was founded in 2001, and our specific focus, our exclusive focus, is to provide software system solutions for collateral tracking. Our main office, our headquarters, is in Dublin, but we also have an office in the US, in Charlotte, where I'm attached to, and we have an office in the Middle East. But our client base are essentially global. We have clients all over the world, and we have clients in multiple collateral disciplines. So the typical kind of collateral disciplines that we have are is commercial lending, which is the focus of today's call. We also have a number of customers in the wealth area, where typically they're dealing with liquid collateral, things like brokerage accounts, trust accounts, that sort of thing. And we also have an increasing number of customers in the corporate area, where they are interested in the whole area around facilities and limits management, as well as just collateral. So I won't detail our user base. It's listed largely on our website, which I think there should be a link to. It's www.rockalltech.com. But basically, we have dozens of customers, including 4 of the top 10 banks operating today in the U.S. Some of our customers not only use it internally, but they also use it with their outsourced partners in a kind of a BPO, their BPO partners, and they use it obviously in global locations for that. The typical customer use case that's relevant to today's topic, to commercial lending, would be a situation where there are hundreds or thousands of users of the system, and they can be back-end users, people who are doing the actual processing of the collateral, or people even in the front office, around loan perfection and document checking, and also people who are in the relationship management side who are able to view the system. So it's typically a pretty large user base, and we see clients, sizes typically, extending into the hundreds of thousands of loans, and then a multiple of that in terms of collateral items. So just to give you an idea of the kind of scale of operations we're talking about here, and the efficiencies that can be reaped across that scale. And so just our little tagline here is that on a daily basis, we see that over $1 trillion of collateral is processed by our systems across our client base. Just the word stock there is the product name. It stands for a systematic tracking of collateral. So with that, I will introduce our featured speaker today, who is Luke Nestor. Luke is the founder and Chief Executive Officer of Rockall Technologies.
Thank you, Mike, and thank you, Mark. Today, I'm going to bring you through a series of slides. First of all, the challenges of collateral management, both in times of recession, as we probably all are living in today, and times of growth. I'm going then to talk to what a unified approach to collateral management is from a business and to a point from a technology perspective. I'm then going to talk about the world of collateral management and the tasks involved in the commercial lending process. I'm going to then address benefits of a unified approach, or holistic approach, as the term has been used, and then we're going to touch on a case study, as Mark said. We'll finalize the presentation today with responding to some of the questions that may come up during the process, and as Mark has mentioned, there's a tool for you to do that. So, challenges. This picture typically represents an organization that hasn't addressed a unified approach to collateral management. What the typical scenario is, there's multiple systems at play. There's a whole load of spreadsheets, which is probably the biggest and the most prevalent one of all, where you'll find series of spreadsheets at play. Or there might be smaller FoxPro or Access systems. And these type of systems are kind of independent systems for registries of different collateral types. Quite often you'll find a different registry or a different system for each type of collateral. You'll find separated tickler systems which are not connected to either the servicing system or the origination system or the collateral data system. It's almost independent. And these systems are used to produce the reports, and those reports are issued to various people in the organization for managing exceptions. You typically have a lot of people doing different tasks, and people kind of pigeonholed into their own world because they don't have that, because they have to learn 7, maybe 8, 9 systems. They learn 2 or 3 and they become experts in them. So they're driven by the systems rather than the processes and the procedures and the business requirements. As mentioned, it's unconnected, unintegrated systems at play from a collateral perspective. Quite often, the way organizations address collateral is by an add-on to an existing servicing or booking or origination system, and quite often that does not go far enough. Admittedly, some organizations have cracked this because they have a proprietary system in the first place and they actually manage collateral quite well. But a lot of organizations we've seen do not manage it well, and they do not have a unified approach to collateral. So, I've mentioned different types of systems like tickler systems and then databases for real estate, databases for vehicles, databases for UCC filings, etc. Databases and spreadsheets coming out your ears, so that it's very difficult to manage the overall thing and get a unified approach. There's also, at times, a strong dependency on individuals, which means that you're vulnerable to an individual leaving or taking unexpected leave, etc. A unified approach to collateral addresses this matter. Systems like, from the mainframe perspective or from main systems, booking systems, AFS, Shaw, FCI Trust, etc., etc. These are all the systems at play that would be typically used in the servicing side of things. So what is a unified approach to collateral? In a very simple form, it's bringing customer, facilities, loans exposure, collateral, and collateral processes together. Collateral processes, exception management, perfection, tracking, and release. So in effect, what we're going to talk to today is how all these things come together and what type of tool set should be in a unified approach to collateral management. So this is a typical after picture, and if an organization addresses collateral management in a unified approach, this is the type of picture they should be seeing versus the original picture where you've got systems and disparate systems all over the place. What you have here in this picture is one central system, one central process with business rules, workflow capability, and integration with various other systems in the organization. Every organization will probably have some form of a doc prep system, which is used for generating the documentation in the first place. Every organization will have some form of document storage capability. That's represented down here on the left-hand side of the picture. Organizations then may have other sources of collateral like trust accounts or brokerage accounts or deposit accounts, and they would act as a feed into the unified collateral approach. Then you have other parties in the market who facilitate various aspects of lien filings, and a good unified system would have an integration point with those parties. There would be fintech for vehicles, there'd be UCC filings, state county, there'd be state county registrations of properties, etc. And there'll be vendors and third parties who assist in that. And the system, and a good system will support the integration directly with the filing organization like the state county or with the third party vendor who does it on behalf of the organization. At the bottom of the picture you see various systems, loan systems at play, and a good system will probably support multiple loan systems because particularly big organizations, they may have various systems managing various types of loans, whether it be commercial loans or consumer loans or wealth management loans, etc. And a good unified system will take feeds from all these sources into the collateral system. The key to this diagram, obviously, on the left-hand side here is you've got mainframe systems, you've got server-based systems, and you've got third-party websites. So now to talk somewhat on the area of the challenges in commercial lending. What are the activities that take place? So just to put this in context, typically from our experience, the world of collateral starts after a couple of steps. Step one is the customer and the relationship manager, the lender, have agreed a loan. Step two is the documents are produced through a doc prep system of some shape or form, and the loan is closed. At this point in time, the documents then are transmitted to individuals or teams or central operations who go through a series of steps, and that's where this slide starts. So document verification is the first step. This is whereby the documents that have been produced by the lender or the lender's assistant are verified. Are all the documents there? Is the deed of trust there? Is the note there? The second step is then, is there any exceptions or problems? Is there a document missing? Is there exceptions to any documents? Exceptions like a signature is missing, wrong date on a document, etc. So there's a series of, I think anybody who's involved in commercial lending or collateral management of commercial lending knows that the type of exceptions that can occur. And then there's compliance, which can actually happen sometimes before this stage, but this would be particularly insurance, flood insurance, etc., where flood zone management and hazard insurance is managed. So once documents have been verified, the key is to get the exceptions cleared up as soon as possible. In the typical world, before a unified collateral management system is put in place, these exceptions are typically entered into a ticker system, reports are produced, and once a month, the relationship manager or the assistants get a list of these problems, and they work through them over the following month. But organizations that we're dealing with are saying, this isn't good enough, it's not quick, and this should be done in a more real-time world. So workflow and exception management are critical aspects of the document verification process. The next part of this stage, the next stage is perfection. And that is the actual filings, the lien filings with state, county for real estate, UCC filings, and insurance assignments, etc. And this in a unified world should be done through with as much automation as possible. The generation of the filing documentation, the UCC searches, the communication with insurance companies, etc. There's a whole series of potential electronic type relationships that can occur rather than traditional paper documentation, emailing, or sending manual documents, correspondence basically. The next step in the process is monitoring during the life cycle of the loan. After the loan is closed and before the loan is paid down, insurances need to be monitored. Insurance renewals, insurances are being maintained. Flood zone changes need to be monitored. Very, very important, the valuation of the assets needs to be monitored. That could be the valuation of receivables, the valuation of real estate, the valuation of securities, if securities are played, the valuation or the balance in a cash deposit account on which there's a lien. And basically, that all leads to the ability to provide LTV, loan to value, or value to loan, depending on how your organization operates. And that is a critical aspect of risk management, of loss provisioning, and also in good times, the ability to see what equity is available to basically promote the opportunity with the customer to leverage off the assets that are already at play. Then release is the next step along the way, and that's obviously after the loan is paid down. But critically here, some organizations and some individuals may have multiple loans and multiple collateral items, cross-collateralization. Without a unified system, it is easy to actually release collateral that shouldn't be released. So a piece of collateral is securing multiple loans, and when one loan is paid down, if there isn't a good system or a good process in place, it is simple to release the collateral item and then the other loan is left unsecured. So it's critical that the cross-collateralization world and release management takes place. Another aspect of release management is timely release. Obviously, I think we all know that some filing bodies like the real estate state counties have times after a loan is paid down. An organization has a number of days. It varies from the 3,000 state counties there in the United States, from 20 days to 50 days, and it's critical to an organization to avoid fines to ensure that it releases collateral on a timely basis. The last aspect is the overall holistic view, the business review, to arm your relationship, your manager, your lenders with information. And that's to be able to see, first of all, to help them to manage the exceptions that are outstanding, and secondly, to help them see the overall picture, so their relationship with their customer is improved. They can provide the customer with all the information that's available to the customer and to them through the holistic view of the system. They can remind the customer of maybe any outstanding items or exceptions that need to be managed, and they will have then the full holistic view of the exposure to collateral or collateral to exposure. The key thing, one of the key things of a unified collateral management system, again, is the management of exceptions in real time to clear exceptions as soon as possible. From over and over again, we go to organizations and we see thousands of outstanding exceptions because there's been backlogs, there's been too much work, the relationship manager, lenders are too busy to get the report, they have another 100 exceptions, there's a big backlog. Whereas if you do it in real time, you're emailing or through a system, you're providing tasks to the relationship manager or the relationship manager's assistant, and you're getting the exceptions cleared in a much quicker and in a real-time way. So if you have a unified collateral system, you can address all the challenges that I've just described, all the things that need to be done in the collateral management world in commercial lending. And this particular slide here addresses the pre-unified approach and the post-unified approach. So looking at these one by one. In the pre-unified approach, you have no single view. You have multiple systems at play, multiple spreadsheets at play. You have a particular system relating to loans, but there's no integration with that particular system in the loans. You've got a whole plethora of different systems running all over the place, and you've got different skill sets. In the post-unified view, you've got it's all together. You can see all your loans, all your exposures, all your customers, the exceptions, and all the collateral all in one place, which makes the management of exceptions and a single view clearly easier. The next step is about the verification of the documentation. Through a good unified collateral management system, you can do that in an automated fashion versus using manual checklists. So from time to time, the checklists will change. You don't have to go and come up with a new manual. You can just automatically, in a good system, you can actually change the checklist, and you can walk an operator through the actual verification process, and that operator will be able to verify the documents that are in place, and if they're not, the system will automatically, by answering simple yes-no answers, questions, will generate exceptions which will be automatically fed to the relationship manager or whoever is responsible for the, that could, by the way, always be an external attorney if it's an attorney-closed case, and the exceptions can be managed that way. So that's your tickler in the old system. In your new system, you've got workflow to manage all this. You then basically have filings, and in the old world or the ununified world, you have it's all manual. It's multiple databases at play, multiple people doing different filings. It's not all in one place, and you have a big challenge there. You have skills pigeonholed into certain areas. You can't cross. Your people can't move from one to the division to another easily. And in the new system, you've got a workflow to support all that. Then you've got liens on other systems within your organization. This might be deposit systems, so a good unified collateral system will ensure that lien is always upheld, because as soon as it gets a notification that the lien is gone, it can raise a flag to say a lien has been taken off a deposit account and action can take place. A unified system will support real-time reviews, the ability to instantly see what is the overall picture, what is all the collateral supporting this loan, what has to be done on that collateral, is there anything outstanding, is there any insurance renewals, is there any UCC renewals required that are coming up that need to be dealt with, but it's all in one place. And then the last aspect is the actual manual release process versus the automated release. And I've touched this already, it's the cross-collateralization world. So you can prevent invalid releases, you can ensure releases are done on a timely basis, etc. So it's really, release is very important that there isn't invalid releases taking place. Okay, so what the benefits of a unified collateral management system? Clearly it's operational efficiency. So you have operational efficiency in relation to a number of areas. First of all, you have potentially less FTEs. In Rockall's experience, I'll touch on this later, we have delivered through a unified collateral approach 50% savings in FTEs in one organization. You have less training because you have an intuitive unified system. You have one place to go for collateral management, and if the unified solution has got prompts and checklists and capability and workflow, the training is significantly reduced, so your cost of training is down significantly. You obviously reduce human error, and that's a prevalent thing where if you've got manual systems, humans make mistakes, and you reduce that significantly. You can also know your performance. You can understand how your staff are performing. You can understand what the status of the overall department is. How much workload have you got? How much backlog have you got? How many exceptions are you getting through in real time? What is your performance like? Through all this, you can actually look at scalability. So in today's times, we're going through recession issues, but obviously going forward, organizations will look to expand and be able to deal with increasing their loan book, increasing the growth of their loan book, and without linearly increasing staff. So, you know, we've talked to a number of organizations in the good times and are looking towards, again, you know, doubling their loan book with a marginal increase in staff rather than doubling staff. There's a fair bit of acquisition going on in the market at the moment, so to take on a new loan book and all that goes with it, with a good unified collateral system, you don't need to take on all the people to manage that. One critical aspect of the efficiency and management is control and risk. And obviously, human error being reduced means you make sure your liens are perfected, that your collateral is not released invalidly, that you can make accurate provisioning in relation to collateral valuation. and you can provide automatic reports from a regulatory and an audit perspective. Another aspect is overall management information. And it's any organization that has multiple people doing this wants the full picture. They want to be able to look at cases, they want to be able to look at overall performance, they want to be able to look at the number of outstanding items, etc., as I've touched on already. So the benefits here are pretty much described in these areas: control, risk, training, release, management oversight, human error reduced, and scalability.
If I can just add, also one of the issues there in terms of the optimal utilization of your human resources is the issue of user profiling. So if users are profiled and the amount of work that they can do, or the type of work that they can do, and the rights that they have in terms of releasing and stuff is tightly controlled, and that there's proper oversight put in place. I think that's a very important part of operational efficiency as well. As is the whole aspect of training. One customer that I like to quote has told me that before they implemented a unified system, it took them 18 months before a new hire was fully operational on all the systems around collateral. And now they can get that person up and running fully operational in 6 weeks. So there's a huge saving in terms of resource utilization right there. And I'll also say, just a final point on this slide, is that obviously if you're empowering your relationship manager and allowing that person access to the systems and with the full knowledge of what's going on relating to the customer's collateral, you have the knock-on impact of improving customer experience, which obviously is a huge goal for all organizations.
Okay, so now to move on to a case study. This is a real bank, and it reflects a lot of the challenges that we've discussed already. So the first challenge they had multiple systems at play. So that carried the overhead of multiple systems, the management of those systems, the IT support for those systems, the IT infrastructure for those systems. It also meant that people coming into the organization or existing employees had to learn multiple systems to actually manage collateral properly. It also ended up being people being pigeonholed from a skill perspective. So there was 1 or 2 experts per system, and then there was people around those people. So it became like, these are the people who manage real estate, these are the people who manage vehicle, which isn't necessarily the most efficient. So if you look at it from a case perspective or a loan perspective, there could be multiple collateralites at play, and to have multiple people, multiple teams, I suppose, managing the different disciplines isn't necessarily the best. It can be done that way, but isn't necessarily the best. So too many systems and too many people. Hard to assess. This particular organization was looking at acquisition, looking at growing its loan book, looking at acquiring other organizations. And it needed to understand, to do that from a collateral perspective, how many people it would need to take on to do it. It found it very difficult to actually understand that. The next challenge they had was they found it very difficult to understand their workload. What number of exceptions were outstanding, truly outstanding? What were people busy with? Where was their backlog? Was there any capacity for doing additional work, etc.? So hard to assess workload. Another very critical area they found was the difficulty of producing audit and regulatory reports, regulatory-related reports. And this was because they had to go to multiple systems to get this information, to bring the things together. Typically, these reports were produced by bringing spreadsheets, access, Foxbook systems together in a very inefficient manner. And usually there was 1 or 2 people hired exclusively for that role, whereas the ideal scenario would be that these reports and information systems are mutually spewed out. So these are the typical problems, and the solution of unified platform management addressed these problems and ensures that the organization was able to move forward by being in a much better position. And they made significant savings in FTEs. They reduced their overhead of systems, and they were fully on top of what their workloads were. They knew that if they wanted to make a new acquisition, what the impact of that would be from a people perspective, and they were able to produce instant reports. So just a final note on that, Rockall's approach, just from a Rockall perspective, our approach to this scenario is we would go and talk to an organization, we would review their existing process, looking to improve those processes, and we'll provide a document outlining those processes and what a system or a unified approach will do. we'll configure and install a system, and we'll provide result verification so that all the challenges that have been addressed above here can be verified and proven out. So that's the last slide. And what we want to do now is really address some of the questions that have come up during the last 20 minutes or so. And looking, just give me one moment. We just want to have a quick look through some of the questions, see if we find any commonality. So, looking at one question here, we've been asked, what's the typical time to implement a unified collateral system? Well, from our experience, it varies from 6 to 12 months. In some cases, it's been more, in some cases less. But if you're, a medium to large organization, which is the typical target for a solution like this, for a full unified approach, we would say 6 to 12 months is the typical time. Our biggest client would have 500,000 loans, 1.5 million collateral items, and that implementation would have taken about 16 months. Our smaller client would have maybe 100,000 loans or 50,000 loans, and that would take 4 months type scenario. So they're the ranges. Somebody else asked about full-time FTE savings, full-time employee savings, their staff savings, or redeploying the staff as against redundancy. And that would be, the best we've seen is 50%. It's actually a bit more, but conservatively 50% of staff savings. And then one question we're looking at here is, what are the typical systems that we would integrate with? And they were, the typical ones would be AFS or Shaw or ACBS from a lending perspective, and from a securities perspective, Pershing, SEI Trust, CT Liens from a UC filing perspective, Hogan from a cash deposits perspective, etc. So just looking. So we have one question that's cropped up here is coding out of the box, or does it involve coding or it's out of the box functionality? From our perspective, it's largely out of the box functionality. We publish APIs and we ask the organization to deliver to those APIs. Typically, an organization can quite easily assemble the data in the right fashion to deliver that. From an external vendor perspective, like CT Liens, that comes standard in the products where that's a part and parcel of the product. Our FinTech or other Pershing or other organizations where we have automated APIs that are already in place. Okay, so that pretty much concludes the question and answers that we've seen. If there's any other questions that people would like to ask, please don't hesitate to make contact with us. The email address is there, our website is there, and the contact phone number is there.
So thank you, Luke. So I'd just like to, we're going to wrap up now. I'd like to thank everyone for attending this morning. I hope that the session was useful for people. And we've finished earlier than we had perhaps initially budgeted for, which hopefully people might appreciate if we can get an extra copy. And as Luke says, if you have any questions, please contact me. My email address is there, and my contact phone number visible on that slide. And I'm sure if you don't contact me, I'll probably be in touch with you anyway. So be warned on that one. So I'd just like to thank Mike and the other organizers and all the attendees. Thanks very much.